Hi, everybody. Well, real estate investing in Canada has been very popular over the last few years because we've seen prices just go up and up and up. But why is this? What are some of the reasons that real estate investing is so popular? Well, today I'm going to share four of those reasons with you in terms of how I see them, and I'll explain why you can expect prices to continually go up in Canada, and also why you should consider real estate investing if you would like to build your wealth over your entire career in real estate. So let's go and jump into this. So I've got four reasons here. The first one is that when we invest in real estate, we are on the supply side of the supply and demand equation for housing. We're meeting a basic human need. You've heard of food, shelter, and clothing. Well, this is shelter. We're providing housing for people to live in. And this is important in Canada because our population is continuing to grow. You're looking at a rate of change graph here for population growth in Canada, and you can see it's always above zero. The total population never actually goes down. In fact, it's got this incredibly linear curve. I'm blown away by this because it seems like we're just growing by the same amount of people every year. This graph goes back to 1972. It says 1800 up here, but I've actually adjusted the graph to show data from 1972, and look how smooth and consistent and reliable that is, which is why real estate pricing continues to grow. Is Our population continues to grow, so there's always going to be demand there. And it's much harder for us to build houses to meet this demand. And if you look at this, this is the new housing starts in Canada. You can see here it's all over the place. It's nowhere near as linear as the demand side is. So there's variability in the supply side with respect to new housing starts. And you can see here, population again in Canada, just under 40 million people here. 2022 was a record year for this in Canada. So despite higher interest rates, which were done in response to these high prices, you can continue to expect very robust demand for real estate in Canada. And we cannot build enough properties to meet this demand and this population growth. So if you look back here, total population growth about 1,050,000. And if you look over here, this is from Statistics Canada as well. It shows how many dwelling units were completed in 2022. Well, we've got about 220,000 of those. So over 1 million people added to Canada in 2022, but only 220,000 housing units in that same period of time. Now, why is that relevant? Well, there's another data set that Statistics Canada reports back to us, and that's the number of people per dwelling unit. So you can see here how many people by household, 1, 2, 3, 4, 5 or more. But you can see down here at the very bottom, the average household size is about 2.4 people. But if you look at 2022, we had over 1 million people move here, and we only added 220,000 housing units. And so we've got twice that average household size at just under 4.8 relative to what exists in Canada as the norm, which is 2.4. So demand is outstripping supply, which is why it makes sense to invest in real estate, even in a market or economy like this, because as population grows up, until we see something to add more housing units to keep pace with this, prices are only going to continue to go up. And you can see here, we've certainly seen this in the last few years. And despite this blip as a result of higher interest rates, I don't think that it's likely to drop considerably from where we've been here so far. So reason number one, we're satisfying this basic human need. Now, reason number two is a leverage, all right, of both your money and your time. So I'll talk about leveraging your money first. Here's an example of an average house in Calgary. It costs about $500,000. To buy it as an investment property, you're going to need 20% down or 100 grand to do so. But that $100,000 allows you to gain access to $400,000 of the bank's money, someone else's money, to go and make the purchase of that $500,000 house. But when you hear about prices going up and prices appreciating, it's the total price of the house that goes up, not your down payment. So you've leveraged your money by putting a down payment down and borrowing from the bank. You've gotten $4 from the bank and $1 of your own for this $500,000 house, but it's the $500,000 that's going to go up in price. So in Calgary, if the prices went up by 5%, and they're going to go up by more than that, I think this year, you would have your house being worth $525,000 at the end of a year. You've only invested $100,000 of your own money, your own equity to get that. So you've achieved the 25% return by getting an asset that's now worth $25,000 more for a $100,000 equity contribution that you put in, which is a fantastic return. That is leveraging your money. Now, leveraging your time, I mean, we all only have 24 hours a day, right? So if you want to be in the rental property business, you have to hire other people and get their hours working for you. So your realtor is going to be doing all of the shopping for you. You shouldn't have to be combing over the MLS to find investment properties. Get a good real estate agent in your market. If you don't have one, reach out to me by way of what the link in the comment below. That's my job, is to help connect people to good salespeople. Your property manager should be looking after finding the tenants, screening the tenants, collecting the rent, paying the expenses, the op costs, and then sending you your net income every month. They should be using trades for all these repairs, never your own hours to do so. Same with your bookkeeper, accountant, to write off all these expenses. So you're getting other people to do all of this work, and you're also getting your tenants' hours because they got to work to pay you your rent. So you're getting a portion of their time to pay off your mortgage and, of course, all of these operating costs as well. So you're looking at about 10 to 20 hours of total time commitment to own an investment property if you do it right. And if you contrast that versus a $25,000 equity gain, I mean, you're talking like $1,000 an hour here. That is leveraging your time. Okay, so the third reason that you need to consider investing in real estate is that it's a protection against inflation, all right? And we're in a highly inflationary environment here in Canada right now. And so if you're not sure, inflation is the rate at which the prices for goods and services rise. And so this includes your operating costs for your rental property, repairs and maintenance, advertising, leasing, accounting, all that stuff. Fixed income gets crushed by inflation. You can see here, we are in a highly inflationary environment. In fact, the highest we've seen in 40 years, where inflation is at 6.8%. But guess what? When we choose to be in the investment property game, our rents will also go up as all of these other costs go up too, okay? We're not limited in terms of what we can charge for rent unless you're in a rent-controlled market. Now you can see here, the average rent increased by just about 11%, not quite twice, but a healthy amount more than that, than the inflation amount. So we're okay, right? We're fine. We've got more than enough rental income to cover off all of the increase that we're going to be seeing in our operating costs, all right? So we're not as hung up on inflation for that. Now, the fourth reason is that we've got a very low risk profile in order to gain access to these incredible returns and leveraging our money and leveraging our time. So low risk versus return profile. So let's go back to our little business here, our house. It has very few moving parts, okay? It basically sits there. It's been built. Yeah, it's got a furnace, it's got some plumbing stuff in there, but this is not like a complex machine, okay? It's not a plane, it's not a piece of heavy equipment or a car. It just stays there, okay? It's also cheap to insure. So if the worst happens and our house burnt down, well, we have an insurance policy in place that will give us all the money back that we need to build a new house, okay? So we can insure our asset against the worst happening to it for a relatively low amount of money. Tech is not going to make our house obsolete. It might make your job obsolete. It might make other businesses or the stocks that you invest in obsolete and affect their value. But tech is not making it any easier for us to live in other properties, okay? We're not seeing that in the housing industry. And so I think you're well future-proofed here when you're in the investment property game. Your debt is also going to get smaller every month that you can hold on to your property. So your tenant is paying you all this rental income, effectively paying off your mortgage for you. Every one of those mortgage payments, about half of it goes towards the principal on the loan, reducing that debt amount with every month. And so your debt is getting reduced just by you staying in the game and keeping your property together. and your income stream is related to an essential need and is inflation protected. Okay, we just talked about that. And lastly, you got no staff in this. You got no inventory that you have to worry about. It's not like you're owning a store and have to buy all this inventory and this outlay of capital. You don't have to do that. You're marketing the space between the walls, which is fixed. It's not going anywhere. So a very low risk set of variables here to kind of manage when you're in the investment property game relative to these incredible returns that you can get, right? Like if you bought a house in 2005, 5 years later, it's worth $100,000 more, but more than that, about $125,000 more. From 2010 to 2020, you can see here, a little over $300,000 to up near $500,000, right? So you can get access to these incredible equity gains because demand is outstripping our ability to add supply. It's just that simple. You get access to these equity gains for a very low set of risks that we were talking about earlier. So those are the 4 reasons. You're meeting a basic human need, you get the power of leverage of your time and your money, you're protecting yourself against inflation, and a very low set of risks relative to potential very high rewards. So if you like investing in real estate and want to know more about it, please subscribe to my channel, like this video. I'm going to be talking a lot more about this and getting very detailed into some of the strategies that we can follow to build wealth in real estate. I hope you've enjoyed the video today. Thanks very much for watching, guys, and we'll see you on the next one.